Welcome to our self-directed IRA and solo 401k Q&A session. My name is Natalie with Sense Financial. We do have a handful of questions that were submitted ahead of time, so we are going to answer those first. But if there are any additional questions, feel free to type them up in the Q&A chat area, and we will answer them after we go through the submitted questions. But today, Dmitriy Fomichenko will be answering all of your questions. And Dmitriy is the president and the founder of Sense Financial, a boutique financial firm that specializes in self-directed retirement accounts with checkbook control. He began his career in financial planning and real estate investing in 2000, and he owns multiple investment properties in various states and is a licensed California real estate broker. Dmitriy holds a designation of Certified IRA Services Professional from the American Bankers Association. And over the years, he's taught hundreds of investment and financial planning seminars and mentored thousands of investors. So thank you, Dmitriy, for joining us today and taking the time to answer all the questions.
Sure. Thanks, Natalie, for facilitating this, and looking forward to your questions, everyone, and let's jump in.
Yeah, so our first question, a couple questions, they're from Chris. So he's asking, can I invest in a business with my solo 401k?
You can invest in a business with a solo 401k, just cannot invest in your own business. You want to make sure that investments that you're making with your retirement account are arm's length, meaning that neither you nor any other disqualified person is involved. The other consideration to keep in mind is that when you invest in a business, if you're investing in a business that is structured as a C corporation and you're simply buying shares, then you're a shareholder. You're not owning portion of the business. Then that should be fine. You'll be receiving dividends. But if you invest in through LLC or a partnership, then your solo 401k essentially will be owning portion of the business, and then all the income and gains from the business will be subject to unrelated business income tax. So certainly keep that in mind and discuss with your CPA about the tax consequences.
He's also asking, what can my role be as an investor?
Well, that's the only role. It will be completely passive as an investor. So you cannot participate in any business decisions and so forth. It's just going to be completely passive.
He's also asking, could I use the services of the business? So if I invested in a brewery, could I go there and have a drink?
Well, the problem is that when you invest in a business like that using your 401k, the IRS rules are very clear. You're prohibited from receiving any personal benefits from the investment of your 401k. So you should not be using any services personally.
Okay, and then last question from Chris is, if I received dividends, then I'm assuming this is passive income and not subject to UBIT?
Well, again, Chris, as I mentioned earlier, if you invest in a business and you buy in shares of a C corporation, then you're owning shares, you will be receiving dividends. That will not be the case if it is an LLC and you actually participating in that as a member of the LLC. That will you will not be receiving dividends. Then you'll be receiving business income that will be subject to UBIT. So again, you do want to make sure that you consult with a qualified tax expert and make sure that you're aware of any potential tax consequences.
Our next question is from Robert. If I were to purchase a duplex property for cash and then say a few months later take out a non-recourse loan against the property to purchase another, but we do not actually purchase another property, where am I supposed to be placing the money in the meantime? Is it with an existing bank, or would it be another bank account set up for the secondary purchase?
Well, if you own a property inside of your retirement account, you are allowed to do a cash out refinance so that you can reinvest those funds. When you do cash out refinance, again, if you have a account with checkbook control, such as a checkbook IRA for an LLC or a self-directed solo 401k plan, you will have a bank account either for the LLC or for your 401k trust, and that's where the funds will go and will stay there until you reinvest. So obviously it is in your best interest to reinvest those funds because you do not want to be sitting just on the cash, but it's certainly understandable. It may take some time for you to find a replacement or find a new investment for your retirement account. So there might be a period of time that you will be sitting on the cash, which is fine. And again, it just you want to reinvest those funds as soon as possible.
Then a follow-up question. Also, if we were to obtain the cash funds out of the bank account after financing the property, will we be subject to penalties?
So Robert, you're asking if we were to obtain the cash funds out of the bank account. So I'm not sure exactly what you mean by that. Those funds are your 401k funds, belongs to the 401k. If you personally take the funds to yourself, then yeah, that will be considered a distribution. And if you take early distribution, that will be subject to penalties and taxes. But as long as the funds of the 401k used to make investments, there should not be any penalties or any consequences.
Okay, our next question is from Dennis. I took RMD from my other 401k account. Do I have to do any additional RMDs from my solo 401k account?
Good question, Dennis. If you took RMD from one 401k, do you need to take RMD from another, from your solo 401k? And yes, solo 401k, unlike an IRA, is subject to RMD just on that particular 401k account. So you need to calculate RMD specifically for that, whereas IRA, all the IRAs that you may have can be lumped together and you can take RMD just from one and not from the other one. But if you are at age that you're required to take minimum distribution, then you will have to do that for your solo 401k plan specifically.
Next question is from Tim. I have a 401k that I would like to roll over and use for real estate investing, purchasing, and lending.
Tim, I see a statement from you. I don't really see a question. So if you have a 401k, yes, you can certainly roll that over into a self-directed IRA or 401k, and you can use that for real estate investing. If for some reason your question got cut off and we don't see it, then reach out to us. Be happy to clarify the answer for you after you clarify your question. But you certainly can take your existing retirement account, convert that to self-directed, and then do real estate investing with that.
Okay, next question is from Brian. What are the financial reporting requirements for a held entity / investment?
Brian, that will be, again, will be helpful if you clarify the question a little bit further. And both for you, Brian, and for Tim and anybody else who's listening, it's important for us to get the details so that we can accurately answer your question. So do use the Q&A section there to perhaps rephrase your question or provide additional details, and we can get to those details towards the end. But and for everybody else who's listening, again, if you have a question that you want to hear the answer, type your questions in the Q&A section of the control. But the reporting requirements are not specifically for the entity or the investments. There are reporting requirements for an IRA or for the 401k. And if it is an IRA, you're responsible for reporting the value of your investment to the custodian. So if you're using a checkbook IRA and you have LLC with multiple investments, you're required to provide the valuation of that LLC, because your custodian, they don't see what's inside of an LLC. You may have multiple assets there besides the cash. Custodian doesn't have access to that information, but custodian is responsible for reporting the value of your IRA to the IRS using Form 5498. That is for IRA only. It's not applicable to a 401k. And the only way for custodian to do that is if you provide them with the fair market value of the LLC that your IRA holds. You're actually responsible for doing that annually. Your custodian sends you a request for that every December. We also just send email to all of our clients with checkbook IRA as a reminder that you need to provide that valuation to the custodian. It's just one number that you need to report. You take all of your assets that are inside of your checkbook IRA LLC, you add them all up, and you provide that number to your IRA custodian. And then custodian will do the reporting accordingly. If you have a solo 401k, then requirements are different for that. You also require to report the valuation, but only if your plan assets exceed $250,000. If that is the case, then you're required to file Form 5500 EZ. Again, it's a different form, and we did send instructions, and we have all of that information available for you on the client portal. We make it easy for you to submit that reporting. Just be sure to follow our guidance.
Okay, our next question is from John. If I had no 1099 income to claim for the past 3 years, am I forced to close my solo 401k?
Good question, John. If you have a solo 401k plan is employer sponsor plan. There needs to be a sponsor. So the sponsor can be an entity such as LLC or a corporation, or it can be you if you're an independent contractor or just a sole proprietor. It can be yourself as a sole proprietor can sponsor a solo 401k plan. If there is no self-employment activity for the last few years, then you're not in business. So technically, you will have to terminate your 401k plan and move the plan assets to an IRA. If you have alternative assets, you will need a self-directed IRA. But feel free to schedule a call with me directly. We can look over your situation, but most likely, again, if you said if there's been no income for the past 3 years, then you don't have a business, essentially. And you will be most likely required to terminate your solo 401k plan.
Okay, this question is from Stacy. Can an inherited IRA, a conventional and Roth, be converted to self-directed / checkbook controlled?
Yes, Stacy. An inherited IRA can be converted to a self-directed IRA, and you can have checkbook control over that. Any IRA can be self-directed. A traditional Roth, simple SEP IRA, inherited IRA, even IRA that you may open for your child, it can be self-directed. We do have clients who have self-directed IRA for their children. So certainly that is a possibility. Just keep in mind that if it is an inherited IRA, you will be subject to required minimum distributions. So you need to be wise how you make investments, because again, you will be required to liquidate a certain amount every single year, unless it is an IRA from a spouse. If you inherit an IRA from a spouse, then that IRA can be converted to your own. Your name will be on that IRA, and you can invest that until you reach a normal retirement age. But if you inherit IRA from anyone other than your spouse, it must be inherited IRA. And inherited IRA essentially is the IRA in the name of the deceased with your name as the beneficiary on that account. So again, when you set up a self-directed IRA that you inherited from someone other than your spouse, it will have deceased name on the account, and you as the beneficiary control that. It will be subject to required minimum distribution every single year, but you have full control over that. Certainly a possibility. Reach out and let's schedule one-on-one with you, Stacy, and figure out what's the best for you.
Okay, this question is from Michael. What forms are required to file for solo 401k contribution, both the plan documents as well as with the IRS?
Michael, if you have a solo 401k and you wish to make a contribution, the contributions are reported, they're not reported on plan documents. There is a form that you complete to document the contribution, and you can access all solo 401k forms on the client portal. So you go to the client portal, which is clients.SenseFinancial.com, log in, and then you go to the maintenance section and go to miscellaneous forms, and then select appropriate form for contributions. There are several sections there to make it easy for you to navigate and access those forms. That is the form for your records. You keep that in your records as the plan administrator, and then you give a copy to your CPA, and your CPA will be reporting that on your tax return. Note that with the solo 401k, there are two types of contributions that you can make. You contribute as an employee of your own business, and then as the business owner, the business contributions. The employee contributions are reported on your personal tax return on a Form 1040, which is a first page of your tax return, whereas the employer or profit sharing contributions are reported on your business tax return. And if you're sole proprietor, that will be Schedule C of your personal tax return. If you're incorporated and file as a corporation, then that will be on your corporate tax return. But both of them are reported on your taxes, and that's something that your CPA will help you and will guide you. Again, pretty straightforward. Your CPA should know what to do with those contributions. So be sure that your CPA is aware of those contributions, because they must be reported on your personal taxes. And then in addition to that, when you file Form 5500EZ, that form also has a section for contributions, so you must report contributions on the Form 5500EZ as well.
This question is from Robert. Can I take a loan out on a home purchased with cash from a 401k investment without penalties?
Robert, if you have a solo 401k plan and you purchased an investment property, you said a home. You cannot have a home in the 401k. Home implies that you're living in it. So it can be an investment property. You cannot have a home in your 401k plan. But if you have a 401k, you can have investment property. If you paid cash for it, then later on, if whether you paid cash for it and it has no debt at all, or maybe if you have a property that increased in value and you want to take additional cash out, that is certainly possible. You can refinance a property inside of your solo 401k. The same rules apply. The loan must be non-recourse, because you personally are not allowed to provide a guarantee for the loan. Therefore, it has to be non-recourse loan. You can't get it from your bank. You got to go with the lenders that specialize in non-recourse financing. We do have a list of lenders on our website. If you go to SenseFinancial.com, and then you click on either solo 401k or checkbook IRA, and then on the side menu you will see a list of non-recourse lenders. There we have about a dozen lenders. They each have a little bit different programs depending on what your needs are. So find that works best for you, work with this lender, and you can certainly do a cash out refinancing the property. The proceeds from that refinance belong to your 401k. They're not for you to use personally, obviously, and you have control how you invest those funds.
This question is from David. I bought tax sale flipping props in both my solo 401k and my personal name using loan from 401k. And the question seems to be cut off, but do you have any thoughts there?
Let me read the question again. So David is saying that he purchased tax sale flipping properties. Well, it's possible to invest in tax sales if that's what you're doing. You mentioned flip, and I need to clarify exactly what you mean by that. But you got to be careful with flipping, because flipping most likely will be considered an active business. And if you run an active business inside of your retirement account, then all the gains and profits from that business activity will be subject to unrelated business income tax. Retirement funds are meant to be invested passively. As long as you invest passively, there will be no tax consequences. But again, if you run an active flipping business out of your 401k, most likely it will be subject to UBIT tax. But David, if you can clarify your question using a Q&A section here, I'll be happy to expand on my answer.
Okay, next question is from Jeff. Can I do a Roth self-directed IRA with checkbook control?
Jeff, you can certainly have a Roth self-directed IRA with checkbook control. So if you any IRA can be self-directed, whether it's a traditional or Roth, simple SEP, again, even inherited IRA, even an IRA for a child, you can have checkbook control over each one of those accounts. Certainly possible, Jeff. Reach out to us. You can schedule a consultation with me directly, so we can spend a little bit more time learning over your situation in greater details, and then see if it makes sense for you.
This question is from Balram. Is my solo 401k made into self-directed IRA considered as 401k or rollover IRA account?
Balram, if you have a solo 401k, then it's not an IRA. It is a solo 401k. You might have funded your solo 401k with the rollover from an IRA, but when you move money from an IRA to a 401k, it's no longer IRA. The funds leave an IRA, now funds are inside of your 401k. So it is not a rollover IRA. Rollover IRA is when you move funds from a 401k to an IRA. A custodian may then designate that as a rollover IRA. But when you move funds from IRA to a 401k, then it is a 401k. You can have an IRA inside of a 401k. You can certainly have funds from an IRA be rolled over into 401k, but it is a 401k.
This question is from Donna. Do you pay taxes on an LLC that's inside of a self-directed IRA, or is it exempt?
Donna, if you have a special purpose LLC inside of an IRA, the reason to use this structure is to provide you with the checkbook control over your retirement funds, because otherwise funds are with the custodian, and custodian have custody of over the funds, and you have to go through your custodian, which is essentially middleman between you and your IRA funds for every single investment, every single transaction. So if you set up an LLC to gain that checkbook control, then LLC is created with the state, and that LLC will be subject to franchise tax or any In California, it's called the franchise tax. In other states, it might be called differently. But if it is, if there is a certain fee or a tax specifically applied by the state, then it will not be exempt, because that's the cost of doing business inside of that state. In California, it's a California franchise tax of $800. Many states don't have that fee at all. It's zero. Some states have nominal fee, but it is essentially, it's not a tax. It's just a cost of doing business inside of that state, and your LLC will not be exempt from that. It will be exempt from income tax. So you will not be paying any income tax on that, but certainly cost of doing or having the LLC in a state will apply.
This question is from Vinny. Can I use the solo 401k to invest in fix and flips with me being the realtor and mortgage broker on the deal?
Can you use your solo 401k to invest in fix and flips with you being a realtor and mortgage broker on the deal? Absolutely not. There are a few problems with this. Number one, you are considered a disqualified person to your 401k. As a disqualified person, you're prohibited from providing any services to your retirement plan. So being a mortgage broker or being a realtor violates that rule. You providing the services, that's prohibited. In addition to that, being a realtor or a mortgage broker will result in you getting a fee from providing this service. That's another violation. You are prohibited from receiving any compensation to you personally or to any other disqualified person in a connection with the transaction of your 401k. So you'll be breaking another rule. That's not allowed. And then, as I spoke earlier, fix and flip investments can be problematic. If you invest in somebody else's fix and flip, that's fine. You're just lending. Your 401k is passive. But if you actually start flipping inside of your solo 401k, flipping is considered active business, and the gains and income from the flipping activity will be subject to unrelated business income tax. So you probably want to find other ways to deploy your capital, again, being a lender maybe to somebody else who's doing a fix and flip.
Okay, and then we have a follow-up question from Vinny. Can I use the solo 401k funds as a loan to myself with the interest paid to the account and then purchase a property? And he also states that he'll be the realtor and mortgage broker on this deal as well.
Well, Vinay, if you're taking a loan from your solo 401k, this is called a participant loan. There is a limitation on how much you can take a loan from your 401k. You can borrow up to $50,000 or 50% of your account balance, whichever is less. And the loan can be used for any reason. So it doesn't matter what you want to do with the property, with those proceeds, loan proceeds. Once you take the loan, that's your money. You can do whatever you want with it. There is no restrictions there. You can certainly use those funds to buy a property and be a realtor and mortgage broker on those funds. But will that be a wise idea to do? So that's a different question. Because remember, by taking a loan from your 401k, you are actually depleting the balance in your 401k. You should be investing your 401k funds, because when you invest your 401k funds, your investments are growing tax deferred or perhaps even tax free if you're using Roth funds. And now you took the loan out, so the money is no longer inside of your 401k. You can't invest it in a 401k. And if you pull pre-tax money, you're now going to be paying the loan back using after-tax dollars, because that's going to be from your personal income. So in my opinion, that's not a very prudent financially. But again, depending on your situation, you can certainly do that. You just got to decide what's the best use of your funds. And I believe the best use is to maximize the investments inside of your retirement account so that you can grow your investments in a tax-deferred environment.
This question is from Jeremy. Would my self-directed IRA be considered its own business since it is its own entity?
Jeremy, you're probably referring to an IRA LLC. So if you have a self-directed IRA and you have checkbook control over it by utilizing the LLC, special purpose LLC inside of an IRA, yes, it is its own entity, but it is not a business. The LLC is a limited liability company, and in your case, it is a special purpose LLC that is created with one purpose: to be owned by the IRA. IRA owns 100% of the entity. You're the manager of it. So you don't own it, you just control it. And it is not a business. It's an investment entity for you to use to invest your IRA funds, but it is not a business, so it will not be treated as a business. It should be invested and invested passively.
This question is from Jane. Do I send my investment forms to Sense Financial as well as keeping a record for myself? Anything else I need to do after an investment?
Jane, I'm not sure which account you have. Do you have an IRA? Do you have a 401k? It will be helpful to specify that, but let's assume that you have a solo 401k, and if you're making the investment, then you do not need to send any forms to us. As the plan administrator, it is your responsibility to do all the record keeping. So all the forms, all the investments you make, you must document and keep records of that. You don't necessarily need to file it anywhere. Again, we did talk about the annual reporting, which you report the total plan assets. You don't need to report any specific investments you do, but you do need to keep track of that and have the records of that. So I don't know if I fully answer your question, Jane. Feel free to clarify your question in the Q&A section, and hopefully I'll be able to give you a little bit more clarity.
Okay, this question is from Ross. I have been attempting to use funds from my solo 401k to invest in a CD at a bank. I've been rejected by 2 banks because they say they can't open the CD unless it's under my name. I give them all the documentations associated with the solo 401k, but they still won't allow me to buy the CD using the funds. Any advice on a particular bank to use, or what should I do differently?
Ross, you can open an account for your solo 401k at any institution or at most institutions. The key to remember is that you're not opening a personal account, you're opening an account for an entity. In your case, a solo 401k, that entity is a trust, because trust is the vehicle that is created, that is part of your 401k to hold the investments. When you buy investment property, the title is taken in the name of the trust. If you're doing a private loan, the lender will be a trust. If you open in a bank account, if you're using one of our preferred banks, they know how to set up a bank account properly. It will be set up in the name of the 401k trust. If you want to use some other bank, you can do that. Just you need to, we actually have guidance on that. Send an email to me and I can give you a special document that we created that you can give to your to the bank that you're trying to open an account at, and that hopefully that will help. But again, the question you want to ask them is, can you have an entity account? Because again, it cannot be a personal account. You can't open a CD in your name and put your 401k funds in that. It must be opened using your 401k name, using your 401k tax ID number. Can't use your name, can't use your social security number. You will be there on the account when you open the account, because you, as a trustee, control it. but the account needs to be in the name of the 401k plan. Again, happy to provide you guidance. Just shoot me an email.
This question is from Jane. It's a question regarding mineral rights, oil, and gas investments. Are they subject to UBIT if investing via a solo 401k? She's trying to understand what triggers it.
Good question, Jane, but your question is kind of general, and you can certainly invest in mineral rights, oil and gas investments with your solo 401k plan, but how is the investment structured? That's what is missing. And if it is a passive investment and you just receiving some kind of dividends from the, buying shares of the company, then yeah, it should be exempt from any kind of taxation. But if there is a ownership in that particular business, perhaps, then there could be UBIT consequences. So it all depends on how that investment is structured, which is, again, it has various ways to do that. So that's something that you want to discuss with the investment sponsor, and you want to get clarity on how that investment actually is structured.
Okay, we are going to move over to answering questions that were submitted in the chat. This first question is from Rohit. I had a business which qualified for solo 401k, but this year I closed my business. Can I still keep the old 401k intact, or should I close the 401k as well? He's not planning to contribute anything new.
Rohit, if you established your solo 401k for a business which is no longer operating, then the legitimacy of your 401k is in question, because 401k is an employer sponsor plan. It needs to have a sponsor. If you close the business, there needs to be another sponsor. It can be yourself as a sole proprietor or another business. So if you conduct any other business activity and you have another entity, then the 401k plan can be amended, and it should be amended to reflect that change. But if you don't have any business activity at all, then contact us so we can look into terminating your 401k plan and moving the plan assets to an IRA. But again, I always like to get all of the details, and doing that on the phone call is much easier and clearer.
Okay, we did receive a clarification from Tim on one of his earlier questions. So he's asking, I want to purchase a property. Can I purchase the investment property under an LLC and then use the 401k to lend the money to the LLC? And he provides an example, which is 100k property, 20% down is 20k. Can the self-directed IRA lend 20k to the LLC?
Tim, if you're talking about your personal investment, this is your personal LLC, and that LLC buying the property, that LLC is a disqualified person because you own it. You got to trace it back to the owner. So if you are the owner of the LLC, that LLC will be considered a disqualified person as well. And your IRA or 401k cannot lend to that property. That will be a prohibited transaction. You cannot commingle your personal investments with your 401k. You must keep everything arm's length, completely separated. Your 401k and your IRA can make investments, but it has to be completely separate from you personally or your immediate family members.
Next question here is from John. What is the proper way to earn income from money market accounts? Must the money market be owned by the trust, or can it be opened under the custodian's social security number, provided only money is ever exchanged between the 401k's bank account and the money market?
Let me make sure I understand this. What is the proper way to earn income from money market account? Well, money market account, you're not going to earn much income. This is, just maybe a way to park your cash for a short period of time. You should be investing your funds into something that will produce meaningful yield and the investment. But if you If you want to put your 401k funds into money market account, you can do that. You need to, again, as we spoke about earlier, you need to open account in the name of your 401k using a 401k tax ID number. There is no custodian with the 401k, and there is no social security number because you cannot be personal account. You can't use your social security number. You have to use your 401k trust tax ID number. The account must be opened in the name of the 401k trust. If it is an IRA, the account needs to be opened inside of LLC using LLC name and a tax ID number of the LLC. So your personal name should not be there, and as the account holder, nor can you use your social security number. But you can link that account with your existing checking account. You can transfer funds back and forth easily because they will be under the same umbrella, so to speak. Under the same plan owns both accounts, and you can then invest it.
Okay, this question is from Rohit. How many years can I have no income before requiring to close my solo 401k?
Rohit, I think it's a follow-up question on the previous question. So if you have to have a legitimate business to establish a solo 401k plan. So if you're self-employed and if you maybe it's your side business and you had income in 2022, but then maybe year 2023 was slow. As long as you're still in business and you're making effort to generate income, that might be okay. But if there's been a few years and you don't show any revenue, then you don't have a business because you're in business to generate revenue, generate profit. If there's been 2-3 years that there is no income, then how can you justify that you have a business? You don't. Then you do need to look into, again, if you don't foresee generating profit from this business activity, then you need to look into switching to an IRA perhaps. But again, reach out, let's talk about your specifics and figure out the best course of action for you.
Okay, we have another question from John. Can I sell via quick claim deed a personal owned property to my solo 401k trust?
John, you should know the answer to this. You've been a client long enough, and you know that you're a disqualified person. And as a disqualified person, you're prohibited from engaging in any transaction with your qualified retirement plan. So selling a property to your 401k is a direct prohibited transaction. It's a transaction between a disqualified person and a qualified retirement plan. So absolutely not. Your 401k cannot ever own a property that you personally own. Not possible.
This question is from Jeff. Can I open within my Roth checkbook IRA a brokerage account?
You should be able to open a brokerage account for your, if you have a checkbook IRA, then you do have an LLC that your IRA owns, and you can have a brokerage account for the LLC. That's possible. Then you can link your checking account of the LLC with the brokerage account of the LLC, and then you can transfer funds and invest some cash using a brokerage account.
And I think Jane clarified from one of her earlier questions. She was referring to a solo 401k in regards to what investment forms she would need for record keeping. Anything to add to that?
Yeah, I kind of assumed it was solo 401k, and again, to emphasize, Jane, is that all the investment forms are for your records. You have to keep them in your files as the plan administrator. You don't need to submit investment forms anywhere. But hey, if you get audited, you better be prepared.
Okay, and then last question here on participant loans. If I repay early, can I just pay off remaining principal at the time?
Yes, participant loan can be repaid early. No problems there. You take a loan out, and if you're able to repay that early, you don't have to keep it for 5 years. You certainly can pay that off early, and yeah, it's going to be a Romanian principal plus whatever interest you owe for that particular month. Perhaps if you're making monthly payments and you want to pay that off middle of the month, then you'll owe interest for half the month. But that's certainly possible. There is no prepayment penalties in a participant loan.
And then another question from John. If my solo 401k is tied up over several years in a syndication, is that considered employable delayed income?
Let me make sure I understand this. If my solo 401k is tied up over several years in a syndication, is that considered employable delayed income? I'm not sure what employable delayed income is, what the meaning of that, but it's not employable. I don't think it's employable, and it's not income. If you receive the income from a syndication or any other investment, then yeah, that is the income from the 401k. But if you have the investment and it doesn't pay income, then it's not an income. But again, John, I'm not sure I'm fully understanding your question here, but I understand the concept of investing in syndication. Many of my clients done it. I've done it. But when you do invest, your 401k owns the shares of that, as a limited partner of that particular syndication. And if there is income, it goes to your 401k, and you're able to reinvest that income. If there is no income, and if you're expecting a payout later, then it is what it is. You don't have income then at that point. But feel free to give me a call, and I want to make sure I fully understand your question, John.
Okay, looks like those were all the questions, which brings our session to an end. I just want to thank everyone for joining us today. If you are able to join our next session, it's on February 5th at 11 a.m. Pacific Standard Time. We would definitely love for you all to ask questions and to join us then. I also just want to add that if you are interested in learning more about Solo 401k, we do have a webinar this Thursday on Solo 401k. Our Solo 401k consultant, Brent Sininsky, is going to be presenting. Again, it's this Thursday, January 11th at 5 p.m. Pacific Standard Time. You can find the registration link on our website. We'd love for you to join and ask any questions that you have there also. But once again, thank you for joining, and I hope you all have a wonderful day.
Thank you, Natalie, for facilitating this, and thank you everyone for joining. Have a great rest of the day, and we'll see you next time.